It's that wonderful time of year again, busy season. And here are the top things you have to know about crypto and taxes for this year. This is the NJCPA Issues Watch podcast. Welcome back to the first NJCPA Issues Watch podcast tech edition for 2023. I'm your host, Sean Stein Smith, and I'm always thrilled to be here for a breaking down, talking about anything technology linked, AI, chatbots, RPA, blockchain, crypto, anything linked to technology and how it's influencing all of us on an everyday basis. So I'm always happy to be involved in every aspect at the NJCPA, and I'm even more happy to have joining me this month my friend and colleague, and also, I think, three-time guest, Nicole DeRosa. Welcome back to the podcast.
Hi, Sean. Thank you so much for having me, and Happy New Year.
Happy New Year. And so I asked you back on the podcast because, as we all can see here, not only are you heavily involved in everything to do with the NJCPA, you're also really quite an expert in everything to do with income taxes. And as we all know, we're just about to get into busy season as of our conversation right now. So I was really, really amped to have you back on, to have you carve out some time to be here on the podcast with us, because there's quite a bit going on the income tax front.
There's never a dull moment, and you should know that more than anyone, especially as it relates to crypto.
Never a dull moment. Absolutely. Getting some gray hairs these days, but that's a whole other conversation. But anyway, I'm going to dive right into the questions for our first episode of 2023. And so to sort of introduce, this whole tax conversation, what are the top questions you are currently getting right now as we get into this current tax season?
Sure. So I would say the major question still is, and I think it will be for quite some time now or in the future, how is crypto taxed? I mean, we have non-taxable events, we have taxable events, and then we have those kind of gray area. Not so sure if they're taxable events. I think because crypto is still relatively newer, there's a lot of questions that are pretty much arising, for the non-taxable events. Buying crypto and holding it, not a taxable event. Transferring crypto, to yourself from, maybe one wallet to another wallet. I like to think of this from a tax perspective as you're shifting your money from Wells Fargo to Bank of America. It's still your money. It's still held in bank accounts. It's just held in a different bank account. So one wallet to another wallet. Receiving crypto as a gift. We've started to see this kind of pop up a little bit more now, especially since more and more people are holding crypto. And with that also being said, giving crypto as a gift. Now, keep in mind, not necessarily, this is not a taxable event, but it still might be a reportable event in the form of a gift tax return might need to actually be filed depending on if you exceed those annual thresholds. Crypto is just like any other item that you would ultimately gift. And if it triggers a filing requirement, you still have to report it. Not necessarily taxable, but possibly reportable. And donating crypto, not necessarily a taxable event to the person who is donating it. It might still be a reportable event, though, to the person who's donating it. And if it's over that $5,000 threshold, we'll get into that in a little bit later, you actually need a qualified appraisal because the IRS says it's still property. And if it's property, you need to have a qualified appraisal if you want to claim a tax deduction over $5,000. So that was kind of like a newer thing that popped up a little bit recently. Now on the flip side, we have our taxable events. These are the ones that I feel like people are most I feel like these are the more, I'm not going to say important ones, but these are the ones that people care about, obviously, because it drives your tax rate, right? So we have our general capital gains. If you sell your crypto, just like you sell stock, it's typically going to be a Schedule D taxable event, reported on the Form 8949, going up to Schedule D, being taxed at either those preferential rates if it's held long-term, or taxed at those ordinary rates if it's held short-term. If you convert crypto, oftentimes a lot of people don't think about this one, but when you convert one crypto to another crypto, you technically, that's a taxable event as well. And another one, which is becoming, again, a little bit more popular as more and more people start utilizing and transacting in crypto, buying goods and services using cryptocurrency. So if I want to go to 7-Eleven and buy myself a Diet Coke using Bitcoin, technically speaking, that is going to be a taxable event to me, because when I utilize Bitcoin to purchase my, Diet Coke or my Slurpee or whatever, I'm kind of almost liquidating it or changing it and cashing it out to use the cash to buy my product. That's technically a taxable event, and that's treated as generally a capital gain. Now, on the ordinary income side of things, we have, maybe you're being compensated in cryptocurrency. I think last year, a couple of big time athletes went public and said, I'm going to be paid in crypto now instead of being paid in cash. Crypto, just like wages, same concept. It's treated as ordinary income. Now, I personally haven't seen this too much on the 1040 front, but again, it is becoming more and more popular, and it is an ordinary income item. Mining cryptocurrency, if you have, maybe you've seen some hobby miners, some casual miners, it's generally going to be a Schedule C item. If you have interest income that's generated on crypto, that's treated just like every other type of interest income on Schedule B. Hard forks receive a crypto from an airdrop. And I'm going to say, last but not least, staking. Staking is kind of one of those gray areas to tax or not to tax. That is the big question. And I feel like the big question surrounding staking income and staking rewards is the timing. And I'm actually going to kick this one back to you, Sean, because I know that there's a lot of views with this, and maybe you can explain it for the audience a little bit more better than I can.
Absolutely. But I'm the host of this podcast. Wait a second. So I get to ask questions for
I told you I was going to kick this one to you.
Change, right? I know. Okay. So, obviously, right, there's a lot going on with every aspect of tokenized assets, crypto assets, and how they're taxed, right? From top to bottom. But this whole idea of how to tax crypto staking, income or block rewards is an incredibly hot topic. And depending on who you ask, right, there are very strong views and strong arguments on both sides of this conversation. But it ultimately, I think, boils down to really two things. One, the IRS hasn't really issued any crypto-specific guidance as to how these crypto assets are to be taxed. And sort of pop in the hood more, that ultimately is, or the whole question is ultimately being, I think, driven by what kind of property are we actually creating? Is it newly created property like a apple orchard, right? Or are the people who are involved in the staking basically being paid in pre-existing property? And so that's a really condensed version of the questions that are being raised. But ultimately, the common answer that I'm seeing, just anecdotally, right? So everybody ask your own tax prep advisor on this issue. But the overall answer and attitude that I've seen, even more so after the Jarrett case got tossed out of court in October of 2022, is that basically for now the IRS is treating any staking rewards, staking income, obviously, as income at the point in time it is created, even if the issue over control or the transfer of ownership is still a bit ambiguous. So while on a sort of textbook point of view, it's a bit of a gray area, as of right now, everything that I've seen is indicating the IRS is treating everything as income at the point in time that it has been created. So, but it's a real hot button issue out there for sure. And so, building on all of that, you actually raised two really important points. One is that even if you have clients or even your firm has been conducting transactions using stable coins, which on paper are traded normally on a one-to-one basis at the US dollar, right? So the income tax payment obligation probably isn't going to be super huge, but the income tax compliance aspect of it is exactly the same as if you were doing those transactions using Bitcoin, Ether, or any other tokenized asset out there. So having that conversation up front with your clients, I think is really, really critical to just make sure that everybody understands that any type of coin, NFT, tokenized asset, you're going to have at the very least a compliance obligation going forward.
Yep.
And so,
we start seeing that a little bit. Some of our clients actually have been asking, hey, transacting in crypto, what does that mean for me? What is my compliance requirements, and what basically do I need to do from a tax perspective, and how is it taxed? So a handful, not that many, but they are kind of looking, I feel like, into the future, because they realize that this isn't going away anytime soon. And I think a lot of people in general didn't think it was going to stick around. I mean, crypto's been around for a long time. It just hasn't been as popular as it's been in the last couple of years. And that's why people, I think, are now kind of forward looking and realizing that they have to adapt and evolve in order to survive. And this is one of those things that could potentially, be an avenue of exchange down the road for them instead of just the regular dollar.
Absolutely. And I have my blockchain soapbox actually back there, so that I could hop on at any time. But yeah, absolutely right. That obviously, there have been upticks in prices, there have been crashes in prices, but ultimately on the institutional side, on the enterprise side, there are more and more institutions and entrepreneurs who are at least dabbling in crypto. And there's a whole host of other tokenized asset applications that are due to come out pretty soon. So yes, it is a issue and a topic that has moved quite quickly out of the fringe or sort of a niche area into more of the mainstream sort of tax conversation for sure.
I would say also, looking at it from a tax perspective, the wash sale rules is a big hot topic right now. I had some clients last year that held crypto in their portfolio, business clients that held it in their portfolio, and they're looking and they're like, hey, Nicole, like wash sale rules still don't apply, right? I'm like, they still don't apply technically as of today. Could we see some legislation that passes that maybe retroactively has an application as to 1/1/2023? I would not be surprised if that honestly happened. But back in 2022, I had some clients that took advantage of the fact that their crypto completely plummeted and they accelerated those losses. And, again, as of today, there's nothing saying that the wash sale rules don't apply with regard to crypto. And so I think that's probably one of the more hottest topics as we look forward to, dare I say, the B word or the T word, busy season or tax season, just because I think that we will be seeing a lot of clients or taxpayers kind of accelerating those losses on Schedule D, whether it's on their individual return or their business return, and pretty much just, like I said, they sold them because they took advantage of the plummet or the drop, and then they bought them back up. And, unlike stock, the wash sale rules apply. Crypto, not so much. So that's definitely something I would say from a tax perspective I've seen and I've had more discussions surrounding, especially when it came to year-end planning. And obviously now we're, looking forward to tax season and getting those returns filed and making sure those losses are properly accounted for on the tax returns.
Yeah, no, and so as always, right, any conversation that I've had about crypto since about 2015, it's always a intense topic, fast-moving topic, and then if you introduce tax planning into it, then it's a really interesting area for sure. And to sort of pivot our conversation to my last two questions for you. Outside of any crypto specific issues, right? Because I had you on today mainly to be talking about crypto. But are there any other sort of super obvious issues either in New Jersey or at the federal level that are poised to be really hot button issues this income tax season? And then also, how do you and your team and your colleagues try to stay up to date on all of this stuff?
So I'm going to say hot button issues. I don't have wood near me, but if I had wood near me, I would knock on wood right now. I think this upcoming tax season is going to be very, very similar to last year. Just because, right now, again, as we stand, there has been no year-end extender package. There really hasn't been that much legislation that was necessarily passed that's going to change 2021 versus 2022. We are returning to those pre-COVID norms, I will say, with regard to a lot of the credits. So if anything, we'll probably see less credits, less refundable credits. We have no more stimulus. We have no more advanced child tax credit, the dependent credits, everything returned back to pre-COVID. So those, I would say, is kind of, you know, people tend to get in the habit of expecting things if it happens more than 2 years in a row. So this is the third year, but it's not happening. We're returning back to pre-COVID norms, dare I say. But hot button issues, I wouldn't really say anything noteworthy. How do we stay up to date? Well, I also, and I'm going to plug, I'm going to make a little plug here for two different database, or not databases, but platforms, I'll say. CryptoTrader.tax, which is now Coin Ledger. I have recommended that to a lot of my clients who do trade in crypto, just because I like to push the work back onto them to have them kind of figure out what their actual crypto gains and losses are, because crypto is so volatile. If you know, they buy and sell within a second, the prices could be vastly different, and the gains and losses are also vastly different. Yes, it's very similar to stocks in the sense that, you know, you can generate a 1099-B, but unfortunately it's not really regulated, so that's not automatic. So Coin Ledger or CryptoTrader.tax allows you to integrate and use various API links to kind of link your wallets and import your transactions so that you can pretty much generate Form 8949 and then furnish that to your CPA, and then they can take that and pretty much just include it in the tax return. So it takes a lot of the legwork off of the practitioner. It's relatively inexpensive. It used to be free, but they tacked on a fee now in order to generate these forms. Smart, I don't blame them. But it's $49 if you have 100 or less transactions. I think it's a little under $100 if you have more than, I think, 1,000 transactions. So it's still relatively inexpensive. And I would definitely, again, work smarter, not harder. I like to kind of leverage these sites. They are allegedly secure. I, don't, hold me to that, because it's not me that, has these sites, but I definitely always recommend that to my clients who do engage in crypto trading. Due diligence wise, the big question always, and I feel like a lot of people blow it off just because, hey, whatever my tax software defaults to, that's what I'm going to just use. But that crypto question at the very, very top of page 1 of the individual tax return, we should be making sure that we're asking every single one of our clients, hey, do you have crypto activity? Leave it as big of an open item question as possible. Let them say yes, let them say no, keep it vague, and then dive deeper. Because if you just say, hey, did you buy or sell crypto, that is a yes or no question. It doesn't really provide for much more conversation. But if you leave it open-ended and they say yes, then you can kind of get more information out, because the last thing that you want to happen, especially now that the crypto crackdown is here on a tax perspective, is saying no to that question and then having the IRS come knocking at a later date saying, hey, you didn't report all this income. If you ask the question, keep it vague. If the client says yes, you have kind of more, Pandora's box might be open at that point, but at least you are doing your due diligence as a tax practitioner, making sure that you are properly accounting for any of those accelerated losses. If your clients did engage in, selling those crypto assets when they were lower and buying them back, and make sure that you are properly treating them, whether it's a long-term capital gain, short-term capital gain, ordinary income, interest income, make sure that you are properly classifying it and taxing it. How to stay up to date. I feel anything that Sean either talks about, writes about, or is quoted about, that's pretty much, I would definitely direct you to anything that, any of his content is always great. It's written in plain English. It's very understandable. I also utilize RIA Checkpoint at WIS. I'm fortunate enough to have a license to RIA. I know Bloomberg also, there's similar types of research programs, but on a daily basis, RIA sends out like a daily kind of rundown of important tax topics, depending on, whatever you subscribe to. And I always just kind of read up on that. Crypto and tech is usually integrated, pretty common on, I'm not gonna say a daily basis, but it's sprinkled in there. And then if you're really new to crypto or you're not familiar with the taxation of it or just in general, I would suggest, and this is my other plug, Sturgeon, they do have some self-study courses out there that I actually attended and watched as a self-study on my own. Understanding cryptocurrency was one of them, and then the nuts and bolts of cryptocurrency taxation was the other one. And those two self-study kind of on-demand webinars I felt were really helpful for me, just to kind of shed some more light and provide some color onto, you know, what a staking reward was, what an airdrop actually was, what a hard for all this ABC alphabet soup that, you know, Sean probably talks about and eats, sleeps, and breathes. Those two courses were very helpful for me. So
awesome stuff, Nicole. And as always, you are a wealth of information, content, and you always deliver it in a high energy yet understandable format. So it was awesome having you back on the podcast. I'm sure I will have you back on at some point during the upcoming year, probably after busy season.
Hey, maybe at convention we'll do a special. Who knows?
There we go. That sounds awesome. Thank you again, Nicole. It was great having you on. And just a few quick closing notes here before we sign off for this month. As always, I highly encourage anybody who's not yet a member to join the NJCPA Emerging Technologies Interest Group at njcpa.org/groups. And all of our episodes of the NJCPA Issues Watch podcast, mine and the others, are all available at njcp.org/podcast and on our social media channels. Thanks and have an awesome day.